Stock market rallies again. S&P finishes up 3.46% for the week. Are we ever going to stop going up? Let's talk about that some more. It's Friday, January 18th. Little market update. Markets won't stop going up. The S&P is up 3.46% for the week. This year, I think it's already up 6.6%. The Qs are up 1.57 for the week. They're up 7% year to date. It looks like things aren't stopping anytime soon. If you're like me, you've been expecting the market to kind of turn down for a little bit, but it's not looking like it's going to. So let's take a look at a couple things we have going on here. I'm going to start off with the Dow chart, daily chart, looking at this price action here. It's pretty rare to see that many bullish candles in a row. We lost a little bit of momentum here, and then we started picking it up again later in the week. Had a little bit of a pump fake right here. So a lot of people who were expecting the markets to turn down a little bit lower may have entered in short positions or puts here and gotten shaken out and stopped out here by this big green candle. So just taking a look at a few things here. If you look at the key Fibonacci levels, if we draw this in right here, we can see that yesterday, right at the close, we were finally hitting that 61.8% mark, which is usually a pretty good turning point for trending markets. And you can clearly see with a series of lower highs here, here, and here, 61.8% would be an area where a lot of investors would look for, opportunities to reverse on this market and go a little bit lower. But we just blasted right through that yesterday. We hit that area, and markets toyed around with it before the close, but looks like we're heading more towards 76.4% now. And if we come in here, I'll draw over it. But if we come in here and draw a trend line connecting those tops, then it looks like this trend line's running, overlapping right here with 76.4%. So I wouldn't be surprised to see at least some sideways action there in the coming week. This is an indicator I use that I program myself. It's a variation of relative strength indicator. So it's buried at these high areas. I can very rarely remember seeing it bury that high and staying there. That's one thing that's pretty consistent over history, is that this particular indicator will not, once it's at its range of 100, it's not going to stay up there forever before the markets at least try to come down. Now, I'm not saying it's going to come down and retest the lows that we saw there on Christmas Eve 2018, but I do think that the market has to turn soon. It's got to digest some of this move. It does not like to go linear this long. So maybe we're bullish for the long run, but in the short term, I'm looking for an opportunity to short and buy some puts. But I'm going to wait. I'm going to wait on the histogram to weaken a little bit there on the MACD. Let's take a look at the SPY. This is just an ETF derivative of the actual S&P 500. I'm going to zoom in on some price action here since October. Again, if I draw the Fibonacci's, we're going to be at some key areas. Like yesterday, 61.8, blew right through it. We're at 76.4. I'm still a little bit bearish on this market. We are obviously still in a downtrend. Remember, we always want to trade with the trend, but we have a little bit higher to go before we hit that trending, the downtrend line here. We're going to see something pretty similar on the Qs. You can use the NASDAQ. I like to trade the Qs, but so I use them interchangeably for technical analysis purposes. But it looks to me like if we draw a trend line here, we're actually getting a little closer to that. Heck, we may have even broken the trend line here on the daily chart on the Qs. But Fibonacci price retracement lines, again, we're hitting that elusive 76 area. So it's looking like maybe this move might weaken. It may turn around. I'm always going to trade whatever direction it's going in. So I'm always following the indicators. I'm always following the price action. I'm going to make money in that direction. But I've been making money recently on shorter time frames. So let's take a look at something like maybe a 30-minute time frame here. So a lot of people like to trade with a 30-minute time frame. They like to trade in the direction of, say, like a 5-day moving average. That's something that's really common. So a 5-day moving average on a 30-minute time frame would be like a 65 period. I think that's, we're just going to put in a simple moving average here. If I could find it, there we go. All right, now we'll change that to a 65 period, which is 5 days. So that'll be 5 days, and we'll make this. Let's make it white. Okay. So if we take a look here at the 5-day moving average, get a little bit more history on my charts here. Alright, so if we take a look at the 5-day moving average, we've had some opportunities to trade to the upside. So since the beginning of the year, obviously the 5-day moving average is trending up. So we've had some digestion and some opportunities to get in. So I was able to take some trades here as well as here, and we had this big run up yesterday. So placing trades here, placing stops at the bottom of the pivot low, we're able to really get in and make about 2 to 3 times the risk of that we're allocating for the trade. I'll talk more about how I manage risk in the future, but overall, looking at the markets, we were making a lot of money going down for a good period of time. So really, ever since the beginning of October, we've had lots of opportunities to make money going down. Especially, you can see this 5-day moving average, or 65 period again for the 30-minute time frame. It's trending down, down. I think the market fell as far as 18%. Yeah, I think it fell 18% from. No, shoot, it fell over 20%. It fell more than 18%. But it fell all the way to Christmas Eve, and then all of a sudden, here we go. So following these smaller time frames, we're able to trade down into these moves all the way into Christmas Eve, and we're able to start picking up on more bullish moves as early as 3 days after the first of the year. So not too many trading days between Christmas Eve and the 3rd, because the markets are closed on Christmas and obviously closed again on New Year's. So within a week, as the market turns, we're able to get back in trades where you're looking at these larger time frames, like something like a daily chart. It takes a long time before you're actually able to trade with the trend, maybe only once or twice a month kind of deal. So during those periods of consolidation or market changing trends, things like that, it's a lot easier to make money on these smaller time frames, which is what myself that's what I've been doing, and other traders that I know. It's the kind of things they've been really focusing on. And really, if you want to dive into it, there's money to be made here on these smaller time frames as well. So if we come down to even something like a 2-minute time frame, let me go ahead and remove that moving average there. But on a 2-minute time frame, there's been plenty of opportunities to make money going up. So this is just today. I was able to capitalize on a bullish move here this morning. Had a pullback, another bullish move here, and then another bullish move leading into the close. So 3 trading opportunities just on the Dow today. So the S&P is going to look really similar to the Dow. And then if we go to yesterday, we're going to have a similar situation. Yesterday was a little bit different just because the market would not make up its mind yesterday. That was Thursday the 17th. So you can see here we just had some sideways movement. I lost a little bit of money in here, but I was able to get in some call options here, make a little bit of money, and I lost my next call trade here. I think I entered in right around here. I stopped out, have my stop a little bit too tight here for the call position, but I was able to re-enter luckily in calls right around here. I didn't stop out with this red candle, and then all of a sudden markets took off on good news. Made a good bit of money there. We were able to also enter in positions here going into the close for, gapped up this morning, made some more money. So it was good. So overall, what are we looking for in the weeks to come? I'm looking for an opportunity to see this market turn a little bit. I'm looking for an opportunity to buy some puts. Looking for a chance to trade down, but I'm not certain that we're going to retest the lows of December or anything like that. As a matter of fact, what I wouldn't be surprised to see, if we're talking about something like a Fibonacci retracement, I would not be surprised to see us come down to the areas of maybe like a 38.2. Which would be about 11 points down on the S&P, or sorry, the SPY, the SPY. Let's take a look at the Dow. Similar kind of thought process here on the Dow. If we go ahead and draw these Fibonacci lines, then, you know, down here to about 23,564. So, man, I don't know if we would come down that low. That's a lot. That's you know, over 1,000 points. But, you know, yeah, I could see that. I could see us kind of meandering our way down there. But I wouldn't be surprised if pretty soon we turn, you know, maybe somewhere around this trend line, turning, coming down, retesting areas of about 38.2 on the retracement. If we were to bounce here, I wouldn't be surprised to see it continue to be bullish or even move sideways. But, you know, it could retrace at 50%, and most commonly what I see most of all is about 61.8. I see that a whole lot. But I think the chances of it retracing all the way back down here to the lows of December, I think that's a low chance. But, you know, we're going to trade whatever it is, whatever it's doing. So as it's turning, it's going to be hard to trade on these larger time frames. So again, we can come to something like a 30-minute time frame. Go ahead and insert, you know, insert the moving average there. So again, we'll just do a 65 period. That'll be a 5-day moving average, right? Throw that in there. It's blue this time, but if we start seeing this turn sideways and then trending down, and then we see our oscillators going high, if you're using a range-bound indicator like an RSI, and you see your MACDs crossing lower after your RSI has gone to the overbought areas here above 70, 80, and this is starting to trend down, coming over here into the future, I'd say take advantage of the downside move like that. Start buying puts. Typically, fear is a stronger emotion than greed. You can make a lot of money going down in the markets. I know I did in the last part of the year. So, anyways, we're going to watch next week, see what happens, and that's what I have to say about it. Those are my thoughts. Happy trading.